answer this question for us, and maybe we can have a few of what are your views around robo-advisory. So one question that I would like to pose to the viewers will be, why are you not investing with robo-advisors, and why are you not investing with digital wealth platforms? Right, so it can be, you may be investing with us, but you may be a bit more apprehensive about it. You may also not invest with us because of various considerations around security, across how sustainable this industry is. So do share your views with us so that we can maybe tackle some of the concerns and points that you have based on some of the sharing that we have today. Yep. So yeah, thank you, Sam, for your comments. Okay, so I'll just start off today's session proper. Right, I'll talk about the history of robo-advisory in US. So I'm taking a step back from robo-advisory and even fintech, wealth tech in general. I think all of us understand that the US is the birthplace of many startup ideas, right? If you look at platforms like, for example, Uber, Amazon, Facebook, all of these are the very original ideas of a digital marketplace, a digital social media. And there are companies like TikTok, Lazada. These are the equivalents that have replicated in Asia and Southeast Asia, right? So it's important for us to understand how the Singapore robo-advisory industry will change and evolve based on how the US market has changed and evolved over the years, right? And as you can imagine, because the US is always at the forefront of startups and entrepreneurship, they have a longer gestation period, and they also the ideas tend to evolve and change over a long period of time. So in 2006, there's this platform called Mint that started, right? And it's termed the first robo-advisor. And I think at that point of time, the term robo-advisor is not really the same robo-advisor that we understand of. So it is actually more like Seedly, which is like a combination of helping you keep track of your expenses, your income, using pulling information from different bank accounts, credit cards, so that you have a view of how your personal income status is like, and giving you advice on how to better manage your wealth using this information, right? So it's really more like the original Seedly app, and it's giving advice based on your spending, right? It's not really like the investment type of robo-advisors that we understand of. So that was in 2006. And the next thing that happened is the global financial crisis in 2008. So as many of you would already know, Lehman Brothers collapse, right? Many of the big retail banks in US, they have to be bailed out by the government, right? So I think that really sets the backdrop of the growth of fintech as an industry as a whole, right? Because there is greater mistrust of the traditional financial industry, right? Be it from a B2C, B2B angle, right? Wealth tech, fintech, as well as a payments platform. So I think the stakeholders are not confident that traditional financial institutions are able to serve their needs best. So there is more receptiveness towards fintech and wealth tech in general, right? So what happens in 2010, which is the launch of the real robo-advisors that we know of, and Betterment was actually the roots of Betterment is very startup-ish, I would say. They started off as winning a pitch at TechCrunch, and they launched at 0.9% fees. So they were a very small team at that point of time, and after that, the industry ballooned, and there is a lot of new players, right? So because of the size of the US industry, US consumer industry, banking industry, there is a lot of different variation, right? So you have Alves, which is basically women investing. Wise Banyan, which is now bought over by Exxon. They do similar to what Wealthfront and Betterment is doing. And of course, Vanguard, which is what we all know of as a fund manager trying to offer a digital advisor additional service, right? So you can see that the industry not only just grow as a silo, right? But you can see that traditional players move up and down the vertical, so that they also offer a type of a robo-advisory service in US. And I think we will share more about the Singapore perspective of the growth of robo-advisory and evolution of robo-advisory in Singapore. So if we were to look at the services by the US robo-advisory industry, there is a range of products or rather products and services that they are offering, right? So the most vanilla of it, which most of us understand of robo-advisory, is an investment portfolio with rebalancing. So what happens is that the platform will choose for you a different type of allocation that could be US equities, US bonds, international equities, international bonds, corporate bonds, high yield bonds, government bonds, commodities, right? So there will be an allocation in each of these different type of asset classes, and they will help you rebalance that investment into when it goes too far away from its target asset allocation. So that is the most vanilla type of offering offered by the US robo-advisors, which is something that is offered, in the Asia robo-advisors, offered by Endowus, and offered by similar competitors. There is also retirement solution provided by the US robos, right? So that is very similar to the Singapore tax deferred accounts, SRS, right? So the equivalent, the US term for it is 401k account as well as an IRA account, right? So that is also something very similar that we can see in other overseas robo-advisors. The next one is something that is really stands out in the US and is very developed, thematic investing. So it allows you to invest in themes, right? And the themes here really is the flavor of the month, right? So it could be things like investing in marijuana, could be investing in Bitcoin and blockchain technology, ESG technology, ESG related industries. So really based on a certain narrative of what industry should do well in the future, or maybe socially responsible investing, right? So you are investing for the good of the world, and I think that narrative really appeals to the millennials in the US. So that is really a big part of the offering in the US. So the last few points, debit card and checking solution. So I think Will will probably agree with me on this, is that in the US, people, they tend to spend a bit more than Asians, right? So having that flexibility and additional cash at hand, being able to receive your salary 2 days in advance, 3 days in advance, and use it beforehand, that is the kind of services that are provided by the US robos. And of course, loans with a high interest rate as well. And the last part is around tax loss harvesting. So that is a pretty complex concept. In essence, what happens is that you are given an opportunity to sell the investments that you are making a gain, along with selling an investments that you're making a loss, so that you pay less tax. And I think it really goes back to the point that in the US, there is capital gains tax, and trying to minimize capital gains tax is part of what tax loss harvesting is about. And it's best done by a robo-advisor because it's so tedious to be done by a person. Okay, so on what works and what may not work for the US and the Singapore industry, right? I think in the US, something that really stands out is that it is the financial market of the world. And you see that the biggest asset managers, as well as the biggest brokerage, are all based in US, right? You look at Charles Schwab, you look at Vanguard, iShares, BlackRock, Blackstone. So these are all based in US, and most of the AUMs of these asset management companies are huge in the US. Right. So if you take the fixed operating cost of a fund, a passive fund, right, divided by a huge AUM base, you get very, very low cost. And truth be told, the US ETFs are the lowest cost ETFs that you can find anywhere in the world, and they have a superior liquidity because of the size of the market, right? And of course, because it works really well for the US tax residents. Because the structure is very clean, right? Between the underlying investments as well as the fund, the ETFs or the unit trusts or the funds that are there, there's only one layer of tax that's going on, right? So there's no tax at that level, but when it comes to the individual level, they will be taxed on capital gains tax, dividend withholding tax, or income tax, as well as estate tax. So this it really makes a lot of sense because the structuring is very clean, right? But for Singapore residents, for example, or non-US tax resident, it's very bad because there is we are not, there's no need for us to pay this additional layer of capital gains tax, dividend tax, estate taxes that are not attributed to non-US tax residents. Yeah, so again, the point on tax loss harvesting, I think it's very complex. I will not go into detail of it, but the very nature of trying to optimize for minimal capital gains tax is something that is not easily done by an individual, right? So that is a value add that I see that automation or computation does very well in the US, but it's really not available elsewhere in the world. So the state of robo-advisory in the US, yeah, what happens is that many of these robo-advisors have already effectively become a digital bank equivalent in Singapore, right? So if you were to go back to the previous slides, if you look at the services that they are providing on top of the 3 investing points, what happens is that they are also giving you a ATM card or a debit card, right? And they also, and there is loan services provided. So they are somewhat like a digital bank that you see in Singapore. So, and another thing to point out is that there is digital banks in this US robo-advisors have also become profitable. So what happens is that I think Betterment has announced that they are at 22 billion AUM, and they are of a scale where they are profitable and looking to IPO. So I'll just go on to the next slide. The fee changes of Betterment. So, and also the growth of Betterment. So at the launch, they offered fees ranging between 0.9% to 0.3%. And later on, their AUM growth over 7 years to 10 billion and 320,000 accounts. And at that point of time, their fees is 0.35 to 0.15%. And more recently, they just reported their AUM to grow within that 3 years. They more than doubled their AUM to 22 billion with 500,000 accounts at 0.25%. So that is the growth of the industry. And you can see that the growth in AUM is actually greater than the growth in accounts. So people have trust. I think the conclusion that we can have is people are trusting Betterment as a brand, as well as the industry as a whole. So they are putting more money, doing dollar cost averaging, doing a regular savings plan on that platform. So, and the growth of Betterment has been exponential since then, right? And of course, because they are a privately funded company, funded by VCs and private equity companies, they did have a series of runs of funding. And I think as of 2017, they have received a total funding of US $275 million. Yep, that's it for Betterment. So guys, if you have any questions, do please ask on the chat. Will and I will be more than happy to take any questions from you guys. And it can be around robo-advisors in US in general, in Singapore. And yeah, more than happy to take any questions. So yeah, fees is when we're talking about the fees of robo-advisors in US, in particular Betterment, right? We also should look at some of the fees that are offered in Singapore, right? And as you can see, traditional financial advisors or bank relationship managers, they often offer funds that are very expensive. So normally they are not really transparent about the fees of the funds that they are trying to recommend, right? And these fund fees can range between 0.8% all the way to almost 2%, right? Then of course there's another layer of rep fees, platform fees, and upfront sales charge. So the first year investment cost of a platform like that, right, will be around 3.5%, right? Whereas for a robo-advisor or digital wealth platform, the fund fees are a lot lower because we care about using low-cost funds. And also the fees that we are charging is a flat 0.4, 0.6%. So fees matters, and in that sense, we also are similar to the US robo-advisory platforms. So I think some of the key learning points that we can have take away from the US market is that we need scale to deliver value to clients, to the retail investors, and not just to be sustainable, right? I think something that I didn't really mention in the points previously is that in the US industry, Betterment has really become very systematic in the advice that they are giving to clients, right? They have come up with a set of self-help documents for clients to read when they onboard, right? They also arrange for like a standard 30-minute session of talking through their financial needs of the clients at the very start, right? So that they know how to help themselves. And I think that is also something that potentially robo-advisors or digital wealth platform in Singapore can emulate eventually, right? The next point is that client-centricness is key but a contradiction. So there's this point that it's very difficult to get to give services that clients want, because ultimately we have our own cognitive biases and emotional biases when it comes to managing and investing, right? And we may want to chase after the new hot trend, and sometimes being client-centric can also be a bad thing for the business as well, because they may be chasing after poor high-cost products. So this is something that is very difficult to navigate especially when we talk about ESG or socially responsible investing, right? And of course, there's also the paralysis by analysis, right? So if you give people 30 different thematic investment, how do they choose between all the different choices, right? Is giving people choices good? So that is something that I think is very difficult to navigate for the platforms as well as for retail investors. Right, and the last point, I think we will share more from the Singapore perspective, is that the entire wealth advisory industry or even fund management industry will grow and transform, right? So we talk about Vanguard, which is traditionally a fund manager. They eventually also provide digital advisory services in the US, right? And we can also see later on, we will share about Saxo. Saxo is traditionally a brokerage, but now they also provide robo-advisory services. So the entire space of digital wealth management, wealth tech, fintech, will transform in a way that makes it even more confusing for the layman. And I think that is something that people will have to contend with. They need to, even though if things are supposed to be easier for them, now it becomes more difficult for them to make a decision. And I guess that's where platforms like ValueChampion, Seedly, etc., comes in to help people understand what does the different offering out there mean for them. Yeah, so Will, why not you just maybe share your perspective around Singapore investing, Singapore robo-advisory space?
Sure, thanks, Sheng Shi. Hey, everybody. So as Sheng Shi mentioned earlier, the market in Singapore is still comparatively very young to the robo-advisory market in the United States. That being said, it's developing pretty rapidly at this point. So yeah, you have your platforms like Endowus and Stashaway, as well as some of the traditional banks, but you also have Saxo, an online brokerage, like he mentioned, coming into the market, and even Grab, a ride-sharing app. So I think this is actually really exciting for consumers because you really have so much competition in the market, and as we'll discuss on later slides, this will really benefit consumers in the long run. Yeah, so in terms of what to expect, yeah, I think this slide is quite similar to the one before, but yeah, we expect that with competition and growing scale, as Sheng Shi was discussing with, excuse me, with Betterment, as they grew, they were really able to decrease their fees, which is one of the main attractions of using a robo-advisor, really, and offer more services. And again, in later slides, I'll discuss some of those more, what some of those might be. Yeah. So why use digital advisors in the first place? I think it's, yeah, obviously a fair question. So there's 4 reasons. First, there's a lower barrier to entry. So typically investing in stocks or doing it yourself, or with a private wealth management service, really requires significant upfront capital, or traditionally it has. And with a robo-advisor like Endowus, you can start with as little as $1 in some cases. So this really means that anyone can use a robo-advisor. Excuse me, got something in my throat. But so yeah, so that's great. That means university students, those in the military can all use a robo-advisor, which is great. Additionally, they're convenient. So unlike investing in stocks, which we really recommend that you have really a wealth of knowledge and some experience investing before you put up a significant amount of money, robo-advisors kind of do the homework for you. So you can rely on their algorithms, which are kind of based on your preferences for different things, to make the investing choices for you. So that's a major attraction. And both in Singapore and in the US, I know my friends use robo-advisors for that very reason. And in terms of the advice and the customized portfolio, this is something that is really helpful about using a robo-advisor rather than trying to invest yourself. Most offer, and Dallas offers, customized portfolios, and this is based on your risk preferences, or in some cases, the asset class that you're interested in. In the case of Saif, which is a popular robo-advisor, you can read more about them on our page. But yeah, this high quality advice is super helpful for folks. And finally, they're cheap. So compared to, maybe this isn't the closest comparison to make, but hedge funds typically charge 2% of assets and 20% of profit. Meanwhile, robo-advisors, as Sheng Shi just showed, typically charge a very low flat rate. And further down, maybe in the next couple of slides, I'll discuss how you should be thinking about comparing costs across robo-advisors. But yeah, they're relatively cheap. So these 4 factors really make them attractive to investors. Okay, so yeah, here we go. How should you choose? So there's a couple different things that we factor in on our site, and obviously you can go take a look. So a lot of people ask if you should be looking at historical returns or costs, and so past performance is definitely worth considering, especially because some robo-advisors have folded both in the US and in Singapore. So it's important to get a feel for what they've done over the past few years. That being said, I wouldn't recommend comparing small differences in annual returns from one year to the next, because there are some there's some level of randomness, but they are algorithm based, so it's worth considering.
Will, maybe let me just touch on that point, right? So I think ultimately, if you are looking at very broad diversified portfolios, most parties' investments would be based on how they overweight and underweight certain sectors, certain geographies, and it's very hard to tell whether these strategies work well over a short period of time, right? And there is a lot of randomness around around the market. So when an individual go into the market, and when they choose to do the benchmarking, which is basically the exit price, right? Those have a bearing on the returns comparison, right? And I think it's really very difficult for consumers, end of the day, to be able to compare, to do a like-for-like comparison that is very robust to tell which platform is better in terms of returns. So it's I think really the best way to go about doing it is to look at some of the other own personal considerations around why you are even using robo-advisors or digital web platform in the first place. Okay, so I think Zaz is asking a question that I kind of touched on. So maybe I'll just interject and answer this first. What's the difference between a digital wealth platform and a robo-do? Right. Okay. So I would say that generally the understanding of the word robo-advisor is around using algorithm to decide asset allocation. Right. So it's an algorithm-driven asset allocation or investment decision, right, that is probably vetted by a chief investment officer later on, right? So the algorithm take control, right, and do the recommendation, and the CIO is just the second eye towards the investment decision. Whereas a digital wealth platform, which is something that Endowus is, what happens is that we are a platform that is human first in terms of the investment decision, right? And the robo or the computational power wise is more in terms of the rebalancing, in terms of the projections of your wealth over a long period of time, as well as to do a risk profiling for you. So there isn't really a robo behind the investment decision, right? But it's more in terms of helping you do wealth planning, helping you to understand the different projections out there, doing Monte Carlo simulation. So the long and short of it is that a digital wealth platform is humans first, but guided, letting the algorithm or the computational power of servers, etc., to guide the CIO's recommendation, right? But for robo-advisors, it's the other way around, right? It's algorithm first, vetted by the CIO. Yeah. Hope that answers. Yeah. So Will, maybe you can share more about the investment consideration around choosing different robo-advisors.
Yeah, for sure. Yeah, I think you make a good point. Just to return to the returns point that I was making, I guess, yeah, you got to be really careful. I wouldn't look at anything too short term, but just looking at a longer term thing, you want to make sure you're getting in with a reputable service, like Endowus. That's the point I wanted to make about looking at returns. In terms of cost, I brought this up before. You don't want to just, as one of our slides shows, you don't want to just look at management fees, because I think that can be somewhat misleading. You really want to look at the total cost of investing. And that's true with any sort of investing you're going to do, with online brokerages, with robo-advisors. But you want to find out what the hidden fees are, what transaction costs might exist, and frankly, as well as your own time. So those are all things that we'd like to point out. Additionally, you want to be aware of promotions. And given that the market is so competitive, a lot of advisors are offering promotions. We actually have one, if you look down in the description, with Endowus, so you can click that if you are interested. But basically, these promotions are actually somewhat significant, given that the cost of investing with a robo-advisor is so low. If you also get a promotion on top of that, it can really decrease your total cost of investing, which is great. Additionally, reputation can be something you might want to consider. So, just size in terms of total assets managed. Oh, and yeah, it's something that I thought was interesting and worth mentioning. Given that the market is so competitive, it's worth thinking about, what services might be out there in the future. Maybe that's not how you choose now, but it's worth mentioning that services might expand, and we've sort of both touched on that. So we have a Korea website, and the analysts on that team mentioned to me that the online investment platforms there have started to provide additional services that they didn't used to. So for example, they provide, one of them provides insurance now to protect investors' capital. So this is just to say that in Singapore, the market is competitive, and each of these robo-advisors are looking for ways to stand out. And as they do this, they may continue to offer other services that may be attractive to folks.
Yeah, Will, maybe I think this part is, I have a question for you, right? So where do you how do you see the interest in robo-advisory in Singapore transform over this 1 year, 1 or 2 years?
Yeah, that's a great question. So actually, we have seen like huge growth in interest in robo-advisors. Just on our end, I was looking at some numbers last night for this. I think in the last 6 months, we've seen searches double for compared to the previous 6 months for robo-advisors, and yeah, traffic on our page has tripled over that time. So yeah, there's definitely an increased interest from consumers.
Got it. But have you seen like slightly before that? Is there the exponential growth that you're seeing now?
Yeah, I can't say too far back or what the trend really is, but yeah, we've definitely seen a consistent interest and an increase in interest in investing generally since the pandemic started. Both online brokerages and robo-advisors, people seem to be more looking for better advice better advice on how to manage their money for sure.
Got it. Thank you.
Yeah, so with this next one, what should people anticipate? Yeah, so with so much competition in the market, it's almost similar to the iPhone, where with every new iteration of the phone, you're seeing these sorts of reviews like this is the best yet, feels like magic, feels like the future, or whatever, and all these new features that made each product really special. And we think that given all the competitiveness in the market, that we'll see similar things with robo-advisors. Particularly, robo-advisors we expect will provide, continue to provide better service and more affordable services. And really, the affordability is a big part of this. So one of the main reasons that consumers would consider a robo-advisor, as I mentioned before, is that the cost-saving opportunity. So robo-advisors, as we both sort of touched on this, but just to drive the point home, they're really a scale business. So you can think of Walmart or Amazon or even banks. And as these companies grow and become more stable, they're able to drive down their costs and pass that along to consumers to be more competitive. So we would really expect fees to come down as the industry matures. And that's just something I wanted to bring up again. And yeah, so there may be consolidation as we've seen a little bit in the US market, but we think that's a few years away at this point. And really, in the next few years, I would expect that the robo-advisory marketplace in Singapore will become more competitive, and really consumers will benefit from this in the form of lower fees.
Yeah, on this point, I think there's a question asked by Leander Johans that is, I hope I got your name right, that's pretty relevant, right? What is the investment approach and strategy that Endowus robo-advisor adopt? So the answer to that is actually we are passive in nature, right? We don't try to generate additional returns for as a platform, right? We try to keep our costs low. So what we do is really to give access to good investment product, because end of the day, we believe that we don't want to be a product platform, right? We don't want to generate additional returns. We don't want to manage securities, because there are very reputable big companies, big asset management companies like Vanguard, like PIMCO, like Dimensional, that has been there, done that, right? And they have the scale and efficiencies to do that. So we don't want to take that part of that business, right? And we see the value in access to such products, right? We see a value in giving financial advice and helping people understand how investment should work for them. So that is how we provide value to our clients. And on the point about market consolidation, I think AT is asking how our investments and fund holdings are protected at a robo-advisor agency. So it really depends. I think to answer very broadly in the first place, is that all of the robo-advisors digital web platform in Singapore, the legitimate ones, right, do check out that they have the MAS license, right? And that would mean that they will have to go through audits by the Singapore Financial Regulatory Agency, right? And they also have to make sure that there's a minimum capital. They have to make sure that the assets, their own operating assets, are segregated from the robo-advisors or the digital wealth platforms assets, right? So there is a segregation of money between the robo-advisors as well as the client's money. But I think another way to look at it is that beyond that, how is the money being held and invested? So there are platforms out there where the funds of different clients are all put together under a single platform and then invested together, right? So that's how they manage to invest fractionally using ETFs. So that way of custodizing asset is a bit more risky because only the robo-advisor will have a copy of only the robo-advisor will have a copy of who owns what ETFs or what underlying holdings, right? But of course, there's other platforms which allows clients to have their own custodized account where each of the investment holdings as well as the cash will be held in the client's own legal name. So in that sense, it's a lot cleaner in terms of how the money is segregated, and also a lot safer in the case that the robo-advisor or the platform were to cease operations. What happens is that potentially you might be able to hold on to your investments even though the platform no longer works. So for Endowus, we are the second case, right? You hold and own the assets that you buy or choose to invest in your own legal name. So, and we have an agreement with UOB Kay Hian, which is the largest broker in Singapore, to be able to for you to carry on holding on to your investment even after, in the unfortunate case that Endowus ceases operations. Yeah. So thank you, AT, for your question. Thank you, Leander, for your question. Hope that answers it. Okay, so yeah, Will, shall we move on to some of the frequently asked questions that we have thought of before we move on to the next segment? Yeah, so Will and I thought, of like some of the questions that will be interesting from a viewer perspective, right? And I think we have also seen quite a few of these questions being asked on platforms, forums like Silly.
I could hop in here on the first one. So I actually hear this one a lot. I think we both hear this one a lot, that, should I diversify across different platforms? Should I join a few different platforms? And when I hear this question, I like that the person is considering diversification. Obviously, that's super important. However, when considering diversification, it's really about diversifying assets that you're invested in. And many of these robo-advisors actually provide diversified portfolios for you, which is one of their perks. Endowus certainly does. It's possible, though, that, because these are companies that are investing in a bunch of different stocks, it's possible that if you invested in 3 different robo-advisors, you might have, 3 relatively similar, not necessarily composition-wise, but you might be investing in similar companies. So just by choosing 3 different robo-advisors, you wouldn't necessarily be, getting more diversification in your overall portfolio than you would with a single one. So there is one exception, one general exception, is that some robo-advisors offer, truly unique investment opportunities. And so this might be in terms of the asset class available or in terms of a tax point of view. And so two great examples, SIFE offers the REIT portfolio, so real estate investment trust, which we've found is very popular in Singapore. And then Endowus obviously allows you to invest your CPF and SRS funds. And so in this case, these two actually really do stand out. And so, perhaps there's a case for investing in 1 or 2 of these additionally to diversify. However, in general, you may not get that much of a benefit just from signing up for a bunch of different robo-advisors.
Yeah, maybe I can give my take on this question as well. I think, I totally agree with you, Will. Like looking at diversification matters when it comes to investing, right? And truth be told, I don't really diversify. When I look at traditional brokerages, I don't diversify across brokerage. Right? I only have one, and I make sure that that broker is doing okay, so that my investment is safe, right? So I think another angle is rather than spreading your it's across, right? Maybe also making sure that the platforms that you're using is keeping your investments secure and safe, and the business is doing well. It's actually a better way of managing your money. Because sometimes if we were to spread ourselves too thin, spread our attention too thin, that can also be very can also work against us. I think that's one way to look at it, right? And I also agree with you that end of the day, the underlying investment matters, right? If you are looking at investing in very broad-based investing across different platforms, right? So that will be the US market. The US market will be the like 40-50% of the underlying holdings, and all of the different platforms, it's Sive, Stashaway, Endowus. You'll have a big chunk in Amazon, a big chunk in Facebook, Microsoft. So I think end of the day, if you're holding more or less the same underlying holdings, then the difference will really go back to the investment method, how they choose to overweigh or underweigh certain sectors or certain geographies. And I don't think it really fits the goal of you trying to diversify your risk necessarily, right? Yeah, at end of the day, I would say that if you're asking this question, you probably have to ask yourself, why are you even looking at the services of robo-advisors or digital wealth platform in the first place? If you are looking for convenience, then it doesn't make sense to really have like 6, 7, 8 different platforms. It's like having 6, 7 different credit cards, and that may not work in your own personal preference. So yeah, to ask yourself what you are in for when you try to use a robo-advisory service. Yeah, shall we take the next question, Will?
Yeah, sure. So yeah, tips for beginners. If you're just starting out, it's important to know that investing stocks, there's risk entailed with that. Robo-advisors certainly make it easier, but with any investment, there's a chance, returns aren't guaranteed, and there's a chance that you may actually lose money. This is especially important to consider just given the current environment. Even though the US market is at an all-time high, there's a lot of economic uncertainty due to COVID-19. So to any beginner starting out, yeah, I think robo-advisors are a great place to start, as I mentioned earlier. But I would caution you to start off slowly and, invest some money. Don't throw all your money in at once, and invest, a little bit at a time, and use this as a chance to build some experience and build some knowledge.
Yeah, and don't invest the money that you need in like 3 months' time, right? Because innately there's
Absolutely.
risk involved.
Yeah, for sure. Okay, so for rebalancing, and Sheng Shi, feel free to chime in here because I think this is something you probably know a lot about too. But basically, the way I look at it is, if you're invested in 10 stocks, say 10% each, and one of them doubles, that will significantly alter the diversification of your portfolio. And so as we've talked about, diversification is important, in terms of risk, in terms of reward too, really. But yeah, robo-advisors do this for you automatically, which is another one of their great benefits compared to investing on your own. Do you have anything you want to add to that?
Yeah, maybe a short one. So I think it's very clear what rebalancing means when you have a very fixed asset allocation, which is the case of Endowus, right? You have a certain equities to bonds allocation, and within the equities and bonds allocation, we have a very fixed parameter around how much of a dimensional fund should be holding, how much should a PIMCO fund should be holding, right? So that is very clear because we have a fixed asset allocation, right? But for some other platforms, they choose to manage risk, for example, and they choose to manage, they try to invest based on economic data, right? So they may have asset allocation that is a floating rate, so it will lie within a certain range, and they will choose to adjust accordingly based on market movement. So they do also call that rebalancing, but I guess it can mean significantly different things between different platforms and different investment strategies. Yeah.
Okay, great. Thank you. That's helpful. So yeah, this is another one I see from time to time. So in terms of building a dividend portfolio, it's kind of important to think about the again, the underlying asset. So asset classes geared towards REITs, utilities, pretty mature industries like banks are all worth looking into. Basically, you're looking for stability, safe, well-established companies if you're seeking dividends. And I think Sheng Shi can probably provide more, given his experience, actually his work experience outside of Endowus on this. But that's what I would say about that one.
Yeah, so I do happen to work in some of the real estate investment company, real estate investment analyst role previously, in Capital and in Capital Land. So I do know a thing about or two about dividend income, real estate dividend income, and some of the risks involved. So what happens is that when you look at some of these companies that give high recurring dividends, you will be looking at sectors like telecoms. You'll be looking at sectors like banks, which has a huge retail banking business, right? And also you will be looking at companies that are the real estate investment trust, right? So these industries tend not to reinvest in capital itself, and they will want to give out dividend income so as to generate shareholder returns. And the issue with building a dividend portfolio is that the concentration risk in terms of industry is very high. And as you can see from the COVID-19 crisis, the retail malls are doing very poorly. Office REITs are doing very poorly, and there is already a structural concern around how real estate as a asset class itself would be like in the future, right? So of course you can choose to build a dividends portfolio to help generate income, but and it's great to do it through REITs platform or through buying single stocks like telcos, right? But there's innate risk when it comes to this kind of investment strategy. So another way to look at it is really buying capital gains heavy company, right? And finding a way to sell it at lower brokerages costs, so that you can generate your own dividend in some sense, yeah, based on capital returns. Okay, so I think maybe let me touch on the last question then. Is it better to wait for the Singapore industry to stabilize before investing? So I would think that the person asking this question is thinking more from the perspective of the Singapore robo-advisory industry, right? So I think Will touched about it. It's a much newer industry compared to US, right? And I'm pretty sure that there will be a lot people are more comfortable investing through Betterment than through a robo-advisor in Singapore. I think if you have such a view, it's very prudent of you. So that's a great way to think about it. But I would say that you can invest in a robo-advisor now because as long as you're comfortable with the security of your assets, right? And the next thing is that it is really serving your investment needs. So end of the day, it should really be asking yourself the question whether that platform is serving your investment needs. So, for example, in Endowus, we offer CPF, SRS, cash portfolios, and we do also offer cash management solutions as well. So we are, as much as I would say that we are the most comprehensive solution out there that can serve most people's needs. So yeah, if you do have money that you want to invest for your retirement so that you can live easier today and live better tomorrow, do check out our platform and in terms of safety, in terms of cost, in terms of the kind of investment portfolio that we give you, so that you can see whether we are an option that works for you. Yeah. Okay, so I think at this part of the presentation, we will wait for more questions from the viewers, right? And why not, Will, you can share something more about what ValueChampion does.
Awesome, thanks. Yeah, and just shared the link there to our page. So yeah, to explain what ValueChampion does, we're a team of analysts that help consumers optimize their personal finance decisions. We do that by providing actionable insights that are easy to understand and that are backed by data. I think it'd be helpful if I show you an example. Say you're interested in cashback credit cards. If we go to the next slide, we will, when you come to our credit cards page, you will see the top 6 options that we've identified based on a number of factors that you might be interested in. If you click the cashback button, which we have on the next slide, you'll navigate down to our recommendation, and here you'll get a easy, quick answer with a clear recommendation. So if we go to the next slide, you'll see, best flat rate rebate. Best flat rate rebate rate. Anyways, here you have the editor's review, which is basically our bread and butter. This is the plain language, why this is the best cashback card. We take out the financial jargon and we make this really easy for you to understand. Basically one thing we say is we try to make this grandma friendly so that anyone's grandmother could understand it. So we really sift through the terms and conditions to make this easily accessible for you. And to make these recommendations and to make sure that, they're based on data and they're based on, empirical, our empirical understanding of the card. If you go to the next slide, we actually, in the next one, we create a model that actually calculates how much reward you would earn from each of these cards over a given period of time. And we do that not just for credit cards. Credit cards is one of the easier examples to bring up, but we do this for mortgages, we do this for maid insurance. So we do this, we try to offer a comprehensive resource for consumers. And personally, I cover investing topics like robo-advisors, but I also do personal banking topics like loans. So I sent the link to our page. Oh yeah, here you can see everything we'll cover. I sent the link to our page. Please check it out. If you have any questions, feel free to reach out to me. We also have a Seedly page where you can ask questions directly. That's the intro on ValueChampion. Oh, Sheng Shi, I think you're on mute.
Oh yeah, sorry. Yeah, so we can take a look at the other questions that have been asked. So please, if you can just viewers if you can just take a look at the go to the chat function and just ask your questions around US robo-advisory industry as well as the Singapore robo-advisory industry. We will appreciate any questions and we will try to answer them. So okay, so I think Jackie is asking about how can one deploy your SRS over retirement in the next 25 years with Endowus. I think that's extremely specific. I think the gist of the question is it better to do a lump sum investing or to dollar cost average? I think it's always better to do lump sum investing because you have more money in the market and you are able to generate higher returns from that, taking more risks, having more money in the market. I don't really have a straight answer for you on that, but of course, you can try to split up, like investing half of the money now and space out the other half of the money across 3 or 6 months. And for the money that you're going to pace out the investment, you can put it in Endowus Cash Mart. So that is the way you can look at it. So there's no real clear answer on that, but really how best you can structure your own thoughts and your own investment, so that when the market go up or down, you won't feel that you make a bad choice. Because end of the day, I think we are just trying to minimize regret when we make the investment decision. Yep. So is there any other questions for today? Let me just take a quick look at the questions being asked. Okay, I think we are done for today. Will, do you have any questions for the viewers, or any last sharing and thoughts?
No, I think that was great. Thanks for your time, and I'm glad that our reviews have been helpful. Yeah, I'll share our Seedly link now in case people do have questions later on for my team. But yeah, thanks, Sheng Shi. It's been great working with you on this. Awesome as always to hear your perspective. Oh, it looks like we have one more.
Yeah, we do have one more. Are the investment mainly done through baskets of ETFs? So CM Wong, maybe you can clarify your question, but my understanding is, are you asking if robo-advisors generally invest in baskets of ETF? For most of them, yes. For Endowus, we use unit trust largely, or rather we only use unit trust. So yeah, it really depends on what platforms you are investing through. And some even go to individual stocks as well, which is quite common in some of the Singapore bank robo-advisory offering. Yeah. And that's it. Thank you so much, Will, for joining us at 7 a.m. in the morning and waking up earlier to get prepared. Really glad to have you on board with us, and do subscribe to our content, check out ValueChampion, and we'll catch you again next week, Saturday, on retirement planning across CPF, SRS, and cash. Thank you for your time, guys. Bye.
Thanks. See you later.